Okay, fantastic. Well, guys, thank you so much for coming out here today. We very much love having you guys all out here on this Tuesday. Again, this is Matthew Dyer talking. I'm one of the traders here with Currency House, and I help the series that we've run with the Learn to Trade Like a Pro series. Normally, we conduct the series Learn to Trade Like a Pro on Tuesdays and Thursdays. They're very good webinars for anybody looking to kind of fine-tune their skills. And then we do periodically throughout the week hold various webinars that are in relation to Signal webinars. Those are for individual holding live accounts here with Currency House, so having a minimum budget and a minimum deposit amount in those accounts. We do have one actually occurring this coming Friday. That's going to be with Dan Perry, and it's going to be in the U.S. retail sales figures that we're going to be running. So I'm going to go ahead and chat a little bit more about that near the end of the webinar, but for now, we are going to go ahead and get started with Learn to Trade Like a Pro. This particular session is going to be focused on just the Forex trading side. For those of you that have seen the first part of the series, we focus more on kind of everything intro based. So learning how to log on to the platform, understanding the difference in currency pairings, all the kind of very basic stuff like that. That was what we covered in the beginner series. So if you do need a refresher and you need to check that out, it is hosted on YouTube, our YouTube channel, Currency House. Feel free to go on there. Subscribe. We do post the webinars quite frequently on our YouTube channel. The only difficulty is that a lot of the information that we talk about and a lot of the information we pass you guys on our webinars are all on a live scale. So if you do miss the webinar, then you do miss your chance to ask any questions on a live scale. You do miss your chance to also interact with us. If you're new to our webinar, you can see that on the top right-hand side of your screen, you're going to get a little chat box. In that chat box, you can ask all the questions you want, and ultimately, at the end of the webinar, we will answer. We do hold questions until the end of the webinar just because there are individuals out there who are a bit time constrained. So we want to make sure that we just get through all the material first and then answer the questions afterwards. So having said that, let's go ahead and get started. This one will be focused more on a few different things, placing a trade, managing risk, and predicting the market. So it's going to be three essentials when it comes to ultimately placing a Forex trade that will result in profitability on your platform. So this is all self-traded stuff. Very important to know. A lot of individuals, when they first start, tend to focus on binary options. Binary options are great, and it's definitely something the platform offers. If anything, they're so much fun. At the end of the day, I would only do binary trading for a long time when I first started, and it was definitely a lot of fun. We do our picks for the morning brief in the morning based also on our binary picks for the day, some fun binary stocks that are going to be nothing but going up very slowly in market volatility. So those are normally very good binary bets. You don't want anything too volatile, but for those individuals looking to make the big dollars, it's really going to be Forex. Forex trading, that's foreign exchange trading for short. That's what we call it on the platform. It involves more than just Forex. You can also do currencies, commodities, CFDs, indices, all that kind of stuff is tradable on the platform. But it's called Forex trading for short. And you'll see that on the platform once we log in. But that is where predominantly the main group of core, very financial, viable traders are going to stick to. Those are the guys that are making big dollars. They're not making big dollars on binary trading. They're making big dollars on Forex trading. So that's where you guys need to more or less spend the majority of your time when you're trading on the platform. If you can stick to the Forex trading, and understand markets, understand trends, and see for yourself how easy it is to use Forex trading and use candlestick charting, then you guys definitely will be well in your way to making a good dollar when it comes to the platform. So we're going to show you how to essentially kind of push you toward that path on this session. We're going to show you some of the basic first steps you should be making when it comes to becoming a pro trader and sticking to the Forex side of the menu. So getting started, pretty easy stuff. Let's go ahead and just jump on the platform for 2 seconds and show you guys how to get started. Again, this is the Currency House site, currencyhouse.com, any browser. Sometimes Safari gives trouble, so just try to stick to Chrome, Firefox, or Internet Explorer. If you ever have a problem, of course, just email us, info@currencyhouse, if anything else, and we'll answer right away. So if you don't have an account yet, go to open account. Live account is obviously with live funds, so this is how you make your money. Demo account is fake funds if you want to just practice. Both are available for you to open up immediately. And when you log in, just make sure you pick your live account or your demo account. You're going to need your credentials for either or. They won't work with both. So let's go ahead and do a live account here that I have set up. Okie dokie. So everything comes up. Just enter your password. The great thing about the Currencyos platform is that it's all cloud-based. You don't actually need to download anything to log into the platform, which is so refreshing. A lot of platforms make you download it, so you can't access it from just anywhere. You have to have your computer or download the tools or download something. There's no downloading anywhere. It's all available via the platform. And that is also fantastic when it comes to the app. The app is well integrated into the platform too. If you ever need help using the app or downloading the app, please let us know. It's the best thing ever. It's definitely the best trading app I've ever used, hands down. It's so fun to watch. Everything's in real market time, real market data, and modifying your trades is extremely easy on it. Everything's so modern when it comes to the Xstation platform. It's just so fun to use. Okay, so we got our platform up here. Let's just wait for it to load. That was very simple stuff. That's exactly how you get started, just logging in like that. So that's step one of the webinar complete. So we're through that point. Okay, now step two. You want to place a trade. You want to make some money. And I don't blame you. Everybody wants to make money. I want to make money too. So when you want to place a trade, there's going to be one of two things that you want to do when you place a trade on the Forex menu. You're either going to buy something or you're going to sell it. One of two things. And if you buy something, you can see when your cursor is on the candlestick chart here. This is a big candlestick chart. This represents the DE30. It's the German stock index. It's one of the favorite things of mine to trade. Let's look at USD CAD though. USD CAD is pretty similar. USD CAD is just United States dollar evaluated in Canadian dollars. So how many Canadian dollars does it take to purchase a US dollar? Well, it takes at this time about $1.29 Canadian to purchase a US dollar. Okay, so this is a candlestick chart. For those of you who don't know, a candlestick chart is one of the most preferred methods of charting out there. It's very simple too, and that's why a lot of people use it. The reason it's a candlestick is because they quite look like candlesticks. Not very clever of the economists who created that, but they're not clever, they're just smart. So you can see here all the candlestick charting. Basically, each pillar represents a specific time frame. So you can see here that I have candlestick chosen. You can change it if you want. And I have a 15-minute candlestick chart. You can change it to whatever you want, 1 minute, 5 minutes, 30 minutes. That represents each candlestick. So each candlestick represents that increment of 15 minutes. So if it's white, that means that that period was a down period. If it's blue, that means it was an up period. So this was 4 candlesticks of up in a row. So it was, about an hour of just strictly upward movement for USD CAD that we saw. Here was a huge period of upward movement, and so on and so forth. So you can see it's been quite volatile for USD CAD. It's been really up and really down. But if we look at something like GPB, GPY, the yen, as you guys, if you guys have been reading our brief every morning, the yen would, the yen's been essentially not gaining a whole bunch. The yen's been moving in a lot of different directions. So the yen has been really hurting lately. And you can see this. This is the Great Britain pound gaining on the yen right now because it's increasing in value. So it's increasing in the amount of yen that it takes to purchase a Great Britain pound. So you can see here that there's a lot of blue. There's not a lot of white. That means that this particular candlestick has been moving in an upward motion through this entire time. So that's just kind of a little basic 101 when it comes to candlestick charting, just for you guys that don't know about it. I'm getting a question here. Sorry, just to butt in real quick, just to be unmuted. Guys, we don't do that throughout the webinar. Just make sure to hold your questions until the very end of the webinar. I'm more than happy to answer. So just hold right until the end. I think some individuals just got in, so I just want to make sure that that's entirely clear. But no problems at all. We will answer all your questions at the end of the webinar. Okay, so let's keep going here. Okay, so cool. So we understand that what a candlestick chart is, and we want to make some money. So we want to place a trade. So like I said, there's really only one of two things that you can do if you want to place a trade. That is You either buy or you sell. That's only one of two things, and it's just one of two buttons that you have to press. And you'll see here that everything is located right on the top of the screen right here that you're going to need. When you put your cursor over the candlestick charting, this is going to come up right here, these tools. And this is all we're going to focus on today. There's just 3 buttons that we're going to focus on today. This is placing the trade, this is the stop loss and take profit, and this is a market order. Just those 3 right here. This is how you place a trade. This is a stop loss and a take profit. This is how you place a market order. And those are the 3 things we're covering today. So let's do first things first. Let's go ahead and place a trade. So if you guys are planning on making an account with $1,000 or less, or anywhere between, let's say, $1,000 to $5,000, you should have your lot size, which is right here, around the 0.1 lot. That is the smallest lot you can trade for a lot of different indices and a lot of different instruments. It's what I would recommend sticking to, especially if you're a near beginner trader. Once you start getting a little bit more experienced, you can start upping your trade size. So 0.4, 0.3, that's getting pretty big. That means with any movement that it takes afterwards, you're going to feel some pretty serious shocks in your profit. So let's go ahead and stick to 0.1 here. So I'm going to show you guys what happens. So let's say that you want to, that you predict that the Canadian dollar or the US dollar is going to be going up in value in the near future. So let's look at this chart. So we predict the Canadian dollar, so the US dollar is going to be going up in value. So we predict an upward movement here. If you predict an upward movement, that means you want to buy it. So if you buy something, this blue button here, that means you're going long on the particular instrument. You probably heard that term a lot in trading. Someone's going long on something. You know, I went long on oil. I went long on the US dollar. I'm sure everyone has heard that term here at some point, and that's the preemptive notion that the particular instrument is going to be going up in value in the near future. So that's what that essentially means. So when you press this blue button here, you're going long on it. You're predicting it's going to be going up in value in the near future. If you press this red button here, this is the sell button. This means you're shorting the stock or shorting the currency or shorting something. You probably heard that term too. You've never heard the movie The Big Short. It's exactly what they predicted. They predicted that there was going to be a massive fall. So if you're essentially predicting there's going to be a drop in whatever you're examining. So if I were to pick this, the red button, I would be assuming that we would be going down in the near future. Okay, so if it goes down, that would mean profit. That would mean profit for me. And if it went up and I went long, that would mean profit for me. So let's go ahead and take a peek at this. You can see here that the trader did a buy. So they went long on Euro USD here. So you can see, if you look very closely at your monitor, you see a little buy symbol, right? That means that the trader predicted that there was going to be an upward movement at some point. If we look at the line, we can see that there was it was kind of all over the place for Euro USD when they made that trade. It's going up, it was going down. It went really down. That means it was really digging into their profits. But then all of a sudden, the market hit something. There was a good economic notion that came out in terms of the euro. You know, there's great employment data in the Eurozone, and the euro jumped big time when it came to the US dollar, okay? This big jump here was what the trader was waiting for. When this jump occurred, you can see that the trade turned very profitable. It went up to $166, okay? And just that small little jump right there, that may seem big, but it's really not. And if you look at the difference, it's barely noticeable. Look at the difference. If you look at it, it's basically by a cent, right? It just jumped by a single cent in that period. But the lot size was 0.2 lots. So you can remember what I said is that if you're just trading for the first time and you're sticking to a smaller account balance, try to stick to about a 0.1 or a 0.2 lot size. So a 0.2 lot size jumped up by a penny and you got $166 in profit. So a 0.1 lot and a 0.2 lot, even though they may seem small, they're still pretty big contracts. And when these values jump big time, you're going to be able to see some serious profits. So moving back to this, so the particular trader went long on it, and it jumped up in value, and now they have profit in their account. So really comes to that simple notion is if you buy something and go long on it, you want it to be going up in value. If you sell something or short it, you want it to be going down in value. So let's go ahead and do a trade on our live platform. You guys can see just how easy it is. So let's look at USD CAD here. It seems to be kind of equalizing, but the trend, if we look at a bigger trend line, let's look at a 30-minute trend line. So each candlestick is now about 30 minutes. We can see that the trend is kind of downward. It was up at a peak, but now it's kind of sliding downward. So let's go ahead and short USD CAD. So we're predicting that it's going to be going down in value in the near term. So what button do we press? Well, we press the red button, right? We take the red pill. So let's go ahead and take the red pill. All right, press 2 buttons and our trade has been placed. Obviously, there is a small spread taken, so that's why we're down just about $250 on the trade right now. That's how the platform takes its commission fee for making a trade, is just that little small spread. People ask us that all the time, how do we make money as a company, and that's just it right there. Whenever you place a trade, there's a little small commission taken that if you even predict correctly, you're not even going to notice because it automatically gets eaten up by your profits. So we have placed a trade just like that. We want this white market line to be below our buy line. And if it's below our buy line, that means we have profit in our bank account. So we have our trades open here. You can see your open positions are at the bottom here. You can also check out your history, what you've done in your past, anything like that. So right now you can see our position. It's FX, it's USD CAD. We only did 0.1 lots. It's at a negative because we shorted it. We can see our open price and some other notions, and then we have our current profit, which is negative because we just opened the trade. So our trade is currently open. So what do we do next? Well, you want to manage your risk next, and this is what it comes when we're talking about a stop loss and a take profit. Okay, a stop loss and a take profit are very important. This allows you to essentially have your own little broker in the system, is how I describe it. So you basically have someone working for you inside the platform. And you tell this broker, hey broker buddy, when the particular currency that I'm trading right now hits this level, I want you to close out the trade, take all that profit and put it into my bank account. And your trader says, you know what, no problem. I work for you, no problem. And then you say, okay, but in the reverse side, if it just starts collapsing and I start losing money very quickly, and you can see that, I want you to close out the trade right away so my loss that I start incurring is very minimal. And they say, that's a very smart idea. I will do that as well. So that is exactly what a stop loss and a take profit is. It's going to allow you to cap your gains at a certain level once the market hits that level and place all those funds into your account. And alternatively, it allows you to manage the risk on each trade you place because it's going to stop that trade if it starts incurring too big of a loss. Okay? That may seem like a lot of information to take in, but it's very, very simple stuff. Like, look, so the take profit on this particular trade is up here at 52 pips upwards. So that's like a half a penny. You can see here it's a lot of cash because of how huge the contract is. It's a 10-lot contract, right? I was recommending just a 0.1 or 0.2 lot contract at the very max. All right, so we can see we have our buy line right here. Again, it's a buy. You can see my cursor on the left-hand side of the screen, it's a buy. So they purchased it and it went up in value. And their stop loss is, or sorry, their take profit is currently right here. So buddy here, if he would have had his stop loss placed back here, the trade would have canceled out and he would have had $5,000 in his account. But his stop loss clearly wasn't placed at that point. He's just placing it right now. So right now he's placing his stop loss currently at this level. So he's hoping that his trade keeps on going back up to this level so it will cap out at $5,000 and he'll be able to put that on his account. Alternatively, he's being a very smart trader and he's managing his risk. So if it does collapse to 23 pips, at least it will cut out before it goes back to levels like this down here where he's at an extreme negative of about maybe $10,000 in the hole. So you don't want that. So you want to make sure that your loss is capped at a considerable level that you're willing to lose and that your profit is in place to take advantage of it if you need to. So that is a very smart way of doing it. We definitely recommend doing that on every single trade you place. And let's show you how to do it with the trade that we just placed for USD CAD. So it's very simple stuff. You can see that the market line is currently right at my buy line. But if you place your cursor over the buy line, you're going to see it get highlighted. So you can see it when I move my cursor there, you can see it kind of get highlighted. Hopefully you guys can see that. So when I press it, you're going to see two lines come up. So all you got to do is click it once. And you're going to see your take profit and your stop loss line come into play. So this is going to be a little different from the examples because in the other examples, they went long on it. but we're actually going to be shorting it. So our take profit line is actually going to be on the bottom, right? Because we want it to be going down. So in order to adjust these lines, you simply put your cursor on it, wait till you have this little movement button icon thing, and then you just click on it. Once you click on it, you simply drag, and you're going to see your profit start to grow with every single pip that you go up. So this is an amazing visual if you are at all confused, because it's going to show you exactly where the market line would have to go for you to incur a certain amount of profit. So if you think that the market will jump 32 pips, or sorry, dip 32 pips downward, that's definitely not that big of a jump. Like I said, it's only a half a penny. It's not even a half a penny. It's a fourth of a penny. You can place it to that point. So we're placing it to that point right now. Okay, so that is just 37 pips. It's barely anything. And once you have it at your level, you just simply let go, and then this confirm button is going to come up, which you press yes. And just like that, it's been modified. We can see the notification come up on the top here. So now we have our take profit in place. So obviously, let's manage our risk and set our stop loss. So let's move our stop loss up to just about half of what our take profit is, and click yes. That's always a good notion to come into play when you put your stop loss and your take profit half and half, or sorry, 2 to 1. And the real easy way to get that through your mind is just by thinking that if you ever were to play a game of heads and tails, which at its very most basic form trading is, it's just heads or tails, it's either going to go up or go down, right? It's not going to jump off the page. It's not going to stay flat forever. It's going to go up or it's going to go down, the market. And that's all you're predicting, right? If it goes up or goes down, it's just one or two things at its most very, very basic form. But if you play this game of heads and tails with me, okay, so you play a game of heads and tails with me, and I tell you that whenever you get heads, so whenever we flip a coin and you get heads, I give you $2. But whenever we flip the coin and get tails, you give me $1. You're always going to want to play this game, because even if the law of averages ends up working out at the end of the day, you're going to be up money, right? 50-50, you're going to be up twice as much money as I am. So if you take a take profit and a stop loss at a 2 to 1 and just let the odds fly without any previous market data, you're going to come out on top, because your trades that are profitable are always going to be twice as profitable as your trades that are negative, because your take profit is at 2 to 1. So hopefully that made sense. It's a very easy concept to kind of get underway. We can see that our trade's already moving in our favor here. You can see that the line is below, and that's why our profit is getting less and less. It's almost at a plus. So we just need the market to move a little bit more, and we should be in a good sign here. But I think this is a good trade. Hopefully by the end of the webinar, we'll be up a little bit of cash for you guys to see. So let's hop on to a different instrument. Let's do something different. Let's get onto a commodity. So let's go on to gold, something everybody knows. So if you guys, like I said, ever need to trade change platform, it's very easy to do. You just click the add chart button here. Okay. So we can see that actually our trade has gone into the positive. So we're currently up 15 cents on the webinar. I'm up 15 cents on the day. Woohoo. Okay, so let's go back to managing risk here. So we're done managing risk. We understand take profit and stop loss. Now we're looking at taking it one step further. This is the last thing I'm gonna push at you guys. Hopefully you can wrap your head around this before the end of your day here, is placing a market order. So a market order is very simple. You're basically giving this broker that you have in the system one more job beside doing a stop loss and a take profit. And that is actually placing the trade for you. So say you, right here, if we're looking at gold, say you think that gold is going to keep on jumping right now. See, this is all blue candlestick. That means it's been jumping. So say it's going to keep on jumping right back up to this kind of high that it's been peaking at. But right when it hits this high, you know that it's going to dip right back down, because gold's very volatile, right? So obviously you don't want to short gold right now, because it isn't currently at this high. So obviously it is still going to be jumping up. You don't want to short it yet, because it's still got a lot more room to get up here. So you want to place a trade right here. So if you ever want to do that, you simply click on the squiggly line right here as I describe it. So you can see this is the last phase of our session here, the squiggly line. Once you place that, you're going to see the screen change. So this is where you think the market is going to head. If the market keeps on jumping up to this level, which it looks like it might, the last 3-4 candlesticks have all been positive. So the last hour has just been nothing but pure solid gold performance. So if it goes back up to this kind of high tip that it's been receiving here for the past 2 days, we think that it's going to hit this high tip and then drop back down. So let's mark this as the tip that we think. Now we're going to basically make it as a short trade. So our stop loss, or sorry, our take profit is going to be on the bottom. Where you adjust your take profit to is always going to adjust the trade. So see how my take profit is on the bottom, that means it's a short trade. If my take profit is on the top, that means it's a long trade. So I think it's going to be going up in value. But I honestly think that gold is going to be hitting this point and then going back down based on this candlestick charting that we're looking at right here. So let's go ahead and place our stop right back down at this kind of low level it's been going up. You see how it's just keep rising, right? The last hour has been nothing but really good performance. So as soon as it hits this level, we predict it's going to drop. So let's put our take profit on the bottom right here, and we'll put our stop loss. Obviously, you want to manage your risk right back up there. See if it's going to let us do that. My take profit might be in about a range for it. See, I think it can't be smaller than 2674. So yeah, it wasn't at a good range for it, but that should give you the gist of it. Once you have the right motion set, all you do is click place order and you're going to see the buy line take place right there. Because gold's pretty volatile, it's getting a little bit risky for us to do it. So let's go ahead and back to maybe something like Euro USD, and it should be pretty obvious. Okay, so for Euro USD, let's do the opposite and let's place a market order for the buy. So again, we just click our squiggly line, and let's predict that before Euro USD starts heading back up, it's going to head down just a smidgen more. So let's go ahead and place our entry order right here with a take profit up here and a stop loss down here. All right, so we're all good there. Our lots is at 0.1, perfect. Let's go ahead and place that order. So now we'll see our line strike. So see, we have our buy limit placed right here. So this means if the market keeps moving down, this is going to basically set off an alarm with our broker in the system. He's going to place the buy order with this stop loss and take profit already in place. So this is kind of moving into the more advanced side of the platform. It's definitely something that everybody should strive to do. It's a real easy way to start kind of scalping small trades and placing trades while you're not even at the platform in the first place. So it may come off a little bit confusing to some individuals, but at the end of the day, everything comes down to practice. And if we look at our USD CAD trade, looks like we're doing pretty well here, folks. We're actually up $3 on the day, so I'm pretty happy. I'm up $3 in the past, what was that, 5-10 minutes. We can see that this is all happening in real time right in front of us. So the profit potentials are out there, people. You can see it all happening in front of you. Okay, perfect. So that basically does it for the Forex side. But obviously, I want to give you guys a little bit of feedback and a little bit of instruction on how to move forward if you're looking at starting to trade something different. There are certain things that people can trade and do trade. The biggest traded instrument on the platform right now is definitely Euro USD or USD CAD. If we go back on the platform, our Euro USD chart, this is where we actually place the market order, and where we're actually making money is actually currently on USD CAD. So those are two really easy charts to stick to. The volatility is super high on them, meaning it's going to jump around a lot. So if it jumps around a lot, that's a good thing. You don't want it to just stay steady, moving very slowly up or down. It's pretty boring if you do that. And I know that a lot of you guys aren't going to have a lot of time at your laptops or at your phones, because this is kind of a second job to a lot of individuals, right? So you only have maybe a fraction or two during the day. So you want to make sure that when you are monitoring your screens that there is movement in whatever you're trading. And the best thing that I can recommend to do for that is to look at the chart, the DE30. The DE30 is a very highly traded instrument on the platform, and I can't stress that enough. If you go over to X Social, and if you guys are interested in learning a little bit more about X Social, we're going to be examining that in way more detail on Thursday's session. You can see that basically all of the top traders in the game trade the DE30. So if you guys need, I'm going to get my spotlight out for this one. If you guys need to change to the DE30, you just simply click this plus sign right here and type in DE30, and then it will come up. And then once it comes up, it's going to be on your preferred charting up here. So I already have it on my preferred charting. It's right there. So we're going to go ahead and press that. And I'm not sure if the market's moving too much. The DE30 is the German stock index, so it moves a lot during European hours, and it also moves a lot at the start of North American trading hours. So it's really good for European traders because it moves pretty much frequently throughout their entire year, throughout their entire day. That also includes individuals in South Africa, all over the globe. It's a very highly traded index for that reason. And also it moves a lot for traders in North American hours, especially at the start of the trading day. So you can do trades even lower than 0.10 lots because it's so volatile. And if you trade 0.10 lots, you can see that even on a fraction of a move, you'll be up money. So I just shorted it. So let's see what a stop loss and a take profit will do on this. So you can see that even a stop loss and a take profit to those little levels is huge, right? Even just 84 pips is like a massive jump normally on a currency, but on the DE30, it's like nothing. It moves like pips like crazy, right? Because it represents an entire stock index. It doesn't represent just one particular currency. So it's not fractions of a penny that it moves around. It's actually millions of dollars that it moves around. So whenever it moves a little bit, you're going to be able to feel those vibrations in the market pretty frequently. So it's a very powerful trading tool if you're looking at scalping the market for small gains. So if in the morning before you go to work, you want to make a buck or two, just go on the DE30, place a trade, keep your eye on it because it's going to be moving around a lot. You can see that it's gone up a bit, but I guarantee you if we keep our eye on it, it's going to jump back below that level and we're going to be up money. So that short trade I just did there, we're definitely going to see that hit before the end of the trading day, and I can guarantee you that within the next hour or so I'll be up $27. So it's a very easy way to definitely make a quick buck trading. If you're looking at the long game and you're looking to make money on a long term, look to something more like USD CAD or Euro USD. You can see my USD CAD trade's currently up right now, and I predict that it's going to just keep moving up. While my DE30 trade may go negative for maybe $10 or $15, but I guarantee it's going to move back in the opposite direction before day's end. So those are two definitely stock indices, or maybe three instruments I definitely recommend looking at: USD CAD, Euro USD, and the DE30. If you guys are looking to get a little bit more help on the platform, we do have something occurring this Friday that I definitely recommend taking a peek at and definitely recommend checking out 100%. So this Friday coming up is going to be the U.S. I believe it's core. Yeah, it's the CPI figures and business inventories, as well as the consumer sentiment and retail sales auto for the U.S. A lot of very high moving, high probability, high factor for U.S. in U.S. trading hours. So we're going to be examining this in live time. Pro trader Dan Perry is actually going to be examining this for individuals with a live account. So this is actually going to be a trading signal webinar that we're going to be doing in live time this Friday. So he's going to have his screen open. Hopefully you guys will have your screen open, and he's going to be showing trades that you should be making that day to make you some good cash. So that's going to be on Friday. It's going to be really cool. So hopefully individuals will cap their week off at a big gain. In order to attend that webinar, you do need to have at least 500 USD in your trading account. So I definitely recommend opening a live account by Friday. That will get you access to Dan Perry's live trading account this Friday. Also, we do have slightly good news, hopefully for some individuals. Individuals that are looking at taking advantage of a deposit bonus for this week, you are in luck. There was actually two individuals that confirmed that they were going to do it last week, but they missed the deadline of Friday. So we currently are opening it back to you guys. There are 2 bonus spots remaining for last Friday's webinar that we had it. So if you are interested at receiving the bonus for this week, please feel free to let us know. You can either drop a comment in our question box here and let us know that you're interested in the bonus. We will have a rep reach out to you, or you can go ahead and just email us at info@currencyhouse, and we'll show you how to get it. So if you are interested, lock it up right now. They do go pretty quick. We had it locked up within a couple seconds, I think, during last Friday's webinar. So if you are interested in learning more, definitely let us know. But from all of us here at Currency House, guys, we really hope to see you in this Friday's webinar, the Trading the News with Dan Perry. Like I said, it's going to be a huge trading signal webinar for a lot of individuals. And if you have any questions, please feel free to let me know. I'm going to be sticking around for the next maybe 5 or 10 minutes. So go ahead and drop a question in that chat box. But we enjoy having you all here today. We hope our webinar was informational for all of you guys. And best of luck trading this week.